Hello and welcome to Counting the Cost, Al Jazeera's business programme. I'm Lauren Taylor. Each week we'll bring you all the business and economic news from around the world. Coming up on the show, a superpower sit-down. China and the US tackle the global recession. Reviving ancient roots, we ask what is the 21st century Silk Road? Hungering for a solution, Laos's food supply crisis. And the engine of recovery, how Fiat has turned itself around. But first, there's no doubt that this is the worst recession the US has experienced since the Great Depression of the 1930s. But the big question now, is the worst over? The Federal Reserve believes the pace of economic decline has moderated, and it's seeing some signs of improvement for manufacturing, house prices and employment. To find out how the economy fared over the second quarter of this year, let's cross over to Washington and Shihab Ratanzi.
Well, economists had been forecasting GDP to drop 1.5% in the second quarter. That was significantly better than the previous two quarters, and the second quarter number was better than expected. But unemployment is expected to rise to more than 10% by next year. Joining us now to give his interpretation of the numbers, Frederick Utz, an economics professor at George Washington University. So does this GDP number suggest that the economy is stabilizing? Are we getting a true picture of the health of the economy?
I think we're getting a very good picture of the economy, and one which people had been hoping to get. The sign is that rather than having a decline of 5 to 6% in the economy, we're slowing down and perhaps we're getting towards the trough. 1.5% negative growth is not what people would like, but it's much better than -5.
Now remind us then, GDP, what exactly is that measuring?
GDP tells us what the final expenditures are on all goods and services in the economy. And this includes the expenditures by households in terms of their private consumption, firms' investment in structures and equipment, our exports, our imports, government spending at the federal level and at the local level, and changes in inventories.
I mean, we inevitably go back to the usual question. Yeah, but does that necessarily give us a true picture of the health of the economy? Are there better measures?
I don't know that there's a better individual measure. GDP is a comprehensive number. I mean, it looks at all sectors, really. We have some variables which are, we call indicators. Could be housing numbers, say in terms of housing starts or housing sales. We'll look at durable goods orders, which in June actually rose, I believe, 11% when you took out the automobile problem. So overall, I think GDP it's a much better number.
But it's basically more quantity than quality, it's often argued. The cleaning up an oil spill, it will add to your GDP, whereas,
that's correct.
And so on. I mean, that's not necessarily good for society.
Well, I think as economists, we can only measure what is traded in the marketplace. Now, there are attempts to go out and try to look at the impacts of human behavior on the capital resources that we have, like the clean air, clean water, forests and water and so forth. These are things which currently are not measured in GDP, although there is a movement, and actually has been a movement through the United Nations, to try to measure the green part of the economy.
Might not an alternative way of looking at things be the equitable distribution of wealth, for example? I mean, wouldn't that lead to a healthier society?
I don't know that it would lead to a healthier society, but it is a nice measure for trying to understand how big a piece of the pie is distributed to each person in the economy. If you have very large income distribution gaps where 5% have 90% of the wealth and the income, that's not going to be sustainable for a long period of time, particularly in the world that we live in today with technology and mass communication and transportation. Those sorts of environments, they're going to end.
Professor, thank you very much.
You're welcome.
Now, the world's always looked to the United States to take a lead in the global economy. It's been the source of recovery after recession. But much is changing. Economists now believe the emerging superpower China could help pull the world out of this slump. The importance of China was highlighted during a bilateral meeting in Washington. On the agenda, a wide range of subjects, including the global economy and ballooning US deficits. Tony Cheng reports.
A new world order, with the US president promising cooperation, not confrontation. And a new adversary, or is it ally? China now sits with America astride the world, and this meeting marked the beginning of a pivotal relationship.
We can't predict with certainty what the future will bring, but we can be certain about the issues that will define our times. And we also know this: the relationship between the United States and China will shape the 21st century, which makes it as important as any bilateral relationship in the world. That really must underpin our partnership. That is the responsibility that together we bear.
The burden of that relationship is bearing down rather more heavily on the US than China, however. China currently holds US Treasury bonds valued at more than $800 billion. And as the US looks to kickstart its economy, it's likely to need even more. With credit scarce, only China has pockets deep enough to bail out the US. And in Washington, a definite sense that the Chinese delegation had come to work with the US rather than against them.
Can we manage to do that? My answer is, we must work hard to make it happen. And yes, we can. That is borrowed from President Obama.
But behind the diplomatic smiles, some real concerns for the Chinese this time. US consumer spending has dropped off by more than a third in the past 12 months. And that has hit hard at China's manufacturing base, causing the closure of factories across southern China. In addition to reignite the economy, the US government has borrowed more, and China fears that could cause inflation and devalue its massive reserve of US dollars. But in these lean times, China's managed to survive off its own fat, the domestic economy picking up some of the slack the global markets have left behind. And a massive stimulus package from the Chinese government targeting the core industries in China, ensuring the all-important growth figures stay in the black.
There's been enormous government action within China itself to create this stimulus, and it's had this immediate effect. It doesn't have that much knock-on outside the borders of China.
But the export market is still vital to China's economy, and while green sprouts may have emerged, the recovery is still far from assured. China may now have the upper hand in its relationship with the United States, particularly as it controls the purse strings on which America has come to rely. But if the US economy doesn't recover soon, China knows it'll suffer too. Tony Cheng, Al Jazeera, Beijing.
Well, staying with China, it seems to be regaining its appetite for mergers and acquisitions after a brief hiatus. It also seems to be unfazed by China Alco's failure to buy a $19 billion stake in Anglo-Australian miner Rio Tinto. That deal fell apart last month after objections from Australian politicians to Chinese firms buying their businesses. Let's take a look at some of those deals. In the last 4 weeks, energy giant CNOOC agreed to buy a 20% stake in an oil field off Angola's coast for $1.3 billion. Oil company Sinopec said it would take over Swiss-based Adax Petroleum for $7.2 billion. And China Investment Corp, the country's $200 billion sovereign wealth fund, agreed to pay $1.6 billion for a 17.2% stake in the Canadian zinc and copper miner Teck Resources. Well, China is also opening an old trade corridor as it looks to fuel its growth. Nicole Johnston has more.
An ancient trading route snaking through the Taklamakan Desert in China, part of the old Silk Road, where thousands of years ago Asian and Arab merchants traded goods with Europe. They also travelled across the sea using wooden boats, much like these ones, which are called dhows. Now they shipped slaves and pottery and silk around the world, and great empires were built off the back of it. Now today, that ancient trade route, the old Silk Road, is being revived. And that's because trade between the Middle East and China is booming.
The Silk Road played a very important role historically, linking the Arab world to China. That is why today, reviving this route, even symbolically, is beneficial to both sides. It increases cooperation and helps us achieve common goals.
A Silk Road paved with oil, 40% of China's oil comes from the Middle East, and that's set to rise to 70% in the next 8 years. Take Iraq. China with BP made the only successful bid at the country's recent oil auction. And in Iran, China has replaced the French company Total in a gas field holding 8% of the world's reserves. It's not only oil at stake. This year, China overtook the United States as the Middle East's largest trading partner. It's sending $68 billion worth of goods to the region.
There is a feeling that Chinese goods being exported down this new Silk Road to the Middle East could hinder the efforts of that region to upgrade and industrialize and modernize and create jobs for a very young demographic. The median age in countries like Egypt is only in the mid-20s. So this will be a challenge.
In return, Gulf countries are ploughing money into China. Banks are expecting the figure to reach $250 billion over the next 5 years. But with the global economic crisis, those savvy Gulf investors have taken a hit. Their sovereign wealth funds have lost billions. But China's Middle East envoy says those losses will be recouped.
Despite the economic crisis and the monetary loss suffered by everyone, China continues to and will always protect investors and their assets. This is why I am confident those investments made in China have been the least hit by this crisis, and their future looks promising.
It's a Silk Road both sides hope will be paved with riches. But analysts warn it may also become a bumpy ride. Recently, employees of the mining giant Rio Tinto were arrested by Chinese officials, accused of spying.
Middle Eastern investors will be watching the China Rio Tinto saga closely, and they should. In many ways, Rio Tinto, the way the Chinese have dealt with it, is out of character. They're not in the habit of detaining executives from foreign companies.
The world's changed a great deal since the first dhows sailed across the Indian Ocean to new trading ports, but not when it comes to business.
I'm not surprised that many in the Middle East and other parts of the world prefer dealing with the Chinese because they don't have the baggage the Americans have, and their intentions are always pretty apparent. And China has had a long-standing interest in being an advocate for developing countries.
Coming up after the break, the price of development in one of Asia's poorest countries, how farmland is disappearing in Laos.